We're going to go ahead and get started as a subcommittee. I guess technically we don't have to establish a quorum because this is not a hearing where we're going to be hearing bills today. But I want to thank everybody for coming to the second hearing of the Senate Committee on Public Health and Developmental Services of the second extraordinary session. Today we plan to discuss in more detail potential MCO tax structures. As we all know, the MCO tax is the primary funding mechanism identified by the governor as a funding solution to fill gaps in funding for critical public program services. Our current tax is due to sunset in July of 2016 and is not likely to be reauthorized by the federal government in its current form. Even though it's going to be not until 2016 that it sunsets, I believe that it is extremely important that we deal and have a resolution this year. I am committed. I believe the administration is committed, and I hope and I think the leadership is committed to make sure that that is possible as well. The governor has proposed a new tiered MCO tax structure. Legislation has been introduced in the Assembly to create a flat tax structure. We are not hearing the Assembly bill today, but we will be weighing the benefits and trade-offs between the flat tax and the tiered tax structure, so we will be hearing about that today. We will also hear from the representative of the California Association of Health Plans, who will inform the committee about the work they have done doing to move the model, different alternatives. But before we get into that, we will also have a brief overview of California's insurance market. With that, as I mentioned, this is a very complex issue, but we are committed to finding a solution that works this year. And I'd like to see if my vice chair has or would like to make any comments.
I would, thank you.
Okay, thank you.
Yes, thank you very much, fellow colleagues. Well, my Republican colleagues and I share the goal, as you do, of protecting the most vulnerable citizens of our state. During the special session, we hope to build consensus on how to care for these families and children who need medical attention and, of course, critical services without imposing any new taxes, fees, or costs. In doing that, we must reiterate that the recently passed state budget grows, spending by $11 billion over the last year to a record $265 billion. And despite $10 billion in new tax money, our governor and my colleagues in the majority made the conscious decision not to use the revenue to properly fund reimbursement rates for Medi-Cal providers and those who provide essential services and care for people with disorders like cerebral palsy, autism, and other disabilities. While my Democratic colleagues have consistently argued for lower costs in health care, today we sit here discussing a new health care tax on almost every health care policy in the state, which will affect approximately 24 million Californians. Now, there does not need to be a rush to judgment, we believe, or a cause or a rush for the solution. We all know the current MCO funding mechanism doesn't expire until late next year. So specifically, the Republicans, we've introduced, and we ask our Democratic friends to join us, SB 2-4, which would require that any increase in revenues next year be first used to increase reimbursement rates for the developmental disability service and to restore the remaining 10% reductions to Medi-Cal reimbursement rates. Additionally, we have also introduced SB X2-11, which requires that savings from the closure of outdated state centers to be used to increase funding for community service for the disabled. This year, instead of increasing funds for Medi-Cal providers so they can better serve the 12.4 million Californians who need health care, the majority party chose to expand the already overburdened Medi-Cal system. And so we cannot continue down this path again, asking Californians to pay more and more taxes. They want to know that the poor and disabled are taken care of, but they also want efficient, effective, and accountable government. Senate Bills X2-4 and X2-11 are opportunities to accomplish both. At a minimum, there is no reason we can't wait to see if we continue to see growth in tax revenues without imposing any new taxes. We believe we can move on and are ready to do so, but it is necessary and prudent to be accountable to the citizens of California before they are asked to pay and sacrifice for more for something as important as their health care. And again, we ask our friends to join us in these two bills as solutions. Thank you, Mr. Chair.
Thank you. We're going to go ahead and get started with overview of California's health insurance market. We're going to have Catherine Wilson, author of California Healthcare Foundation's California Health Insurers, Bridge of Change. Are you available? Would you please come up? Do we need to reboot the computer at all, or?
Hello?
Hello. I think they're just restarting the Windows. Okay, I believe everybody up here has a copy of the presentation. If you want, oh, here we're getting started.
I could just get us started while
Yeah, by all means, go ahead and get
Things boot
started.
up.
And we do have copies, and then they can kind of catch up as you're going along.
we don't need the visuals for the first
Okay,
few
all right,
moments.
perfect. Anyway, thank you very much for being here, and please proceed.
It's my pleasure. Good morning, Chairman Hernandez and members of the committee. My name is Katie Wilson. I'm an independent consultant specializing in health insurance markets. Today I'm here as the author of the California Healthcare Foundation publication, California Health Insurers, Brink of Change. I'm here to provide an overview and highlight a few recent trends in the market. In the big picture, California's marketplace is perhaps one of the more complex. Like all states, California has both the commercial and public sector. Despite the presence of major national carriers in our state, we also have very strong state powerhouse insurers, as well as a number of regional plans and small county-level plans. There are a number of trends that we have been seeing for some time, and others which are more recent. In particular, public enrollment, especially Medi-Cal, has increased over the last year. Group insurance has been eroding. That's a long-term trend. Individual coverage has grown enormously with the advent of the ACA, especially the subsidies that are available for people to buy coverage and the mandate to purchase coverage and be covered. What we've seen this summer is merger activity in the health insurance market is really hot. And financially, most plans are in the black. Could someone give me a hand with the pointer? Doesn't seem to be working.
Maybe you can just stay
I'll
up
just
here,
direct
and
me.
then you can just move it for her.
If you could just advance, please. Thank you. When the dust settled at the end of the year 2014, we had a rather different looking marketplace. The individual market, which you can see in the lower left bar, looks pretty small, but it was much bigger. Small group markets covering about 2 million people. That's down a bit. And the group market had shrunk a small amount, but still was by far the largest of the commercial sectors. Medicare had held pretty constant with about 2.2 million people in managed care. So I want to point out that these figures here for both Medi-Cal and Medicare reflect only the managed care enrollees. Of course, there are more Medicare beneficiaries in the state of California. Go ahead. This next slide is an overview of revenue-based market share of the state's insurers. We can see that California has about 6 carriers accounting for about 3/4 of the health insurance revenue in the state. Health insurance companies are operating a $1.25 billion worth of business in the state in 2013. And in the year 2013 shown, premiums for commercial insurance, that means individual, small group, and large group, accounted for about half the revenue. So you're talking about, in 2013, about $62 billion in California was premiums for individual, small, and large groups. And so if you're looking at taxes and so on, it gives you a sense of what your base might be. Moving ahead. In California, we still retain a fairly large nonprofit sector, primarily due to presence of Kaiser and also Blue Shield, although I know there's something of a gray area there. We also have some regional carriers like Western and Sharp, which are also nonprofit carriers. What we see is that the nonprofit insurers account for about half, a little more than half of all the enrollees in commercial insurance in the state, and also about half of all the premium dollars associated with those people. Looking at the lines of business in the state, the blue sectors on the pies on the California Department of Insurance, the right-hand pie, that's the enrollment-based insurance under CDI. There's about 1/4 of CDI's enrollees are in the individual, small, and large group markets. And under the Department of Managed Healthcare, you can see the blue half of the pie, the right side of the pie. That is about half of DMHC's enrollees. The rest are Medi-Cal or other types of business. Drilling down just a little bit on the types of business that are being conducted, we see in this chart the lines of business by insurer. So you can see that the blue bars, the blue components of the bars, are the individual, large, and small groups. The orange bars are the public, and that little part out at the tip of the bar, which is sort of turquoise color, that represents self-insured business that insurers will provide administrative services only to. So they're not taking risk, but it's an important service. So you can see that not all carriers have constructed their business in the same way. For example, Anthem has a large amount of administrative services only business, and also Cigna. You can see too that carriers have different levels of service to the public sector with the orange bars. Looking down towards the bottom of the set of bars, you can see LA Care, all orange, and you can see all others, which is a lot of county-based plans, has a big orange bar, the big orange sector at the bottom. What you also see, some carriers have less coverage of the public sector, notably Blue Shield is not, at least yet, that big on the orange sector, the public sector. I think they're interested in the Care First acquisition would change that. And again, Kaiser's orange is primarily Medicare, although it's not broken out for you. Enrollees have purchased different kinds of products to cover themselves. In California, HMOs are probably the most common, but in the individual market, historically, there's been very heavy use of PPO coverage. That's changing a little bit now under the ACA. And with more standardized benefits. However, we still see a large amount of PPO coverage in the individual market, and a fair amount of that is actually being regulated by the Department of Managed Healthcare. Some over 2 million people. Next slide. Depicts the breakdown in enrollment between our two regulators in California. You can see that the top bar for each payer is 2013, and the second bar for each payer is the most current year, 2014. You'll see that between 2013 and 2014 in the individual market, there was a dramatic shift in where coverage was regulated. We went from about 70% of enrollment in the individual market regulated by the Department of Insurance to some 82%, which is that second bar from the top on the individual market. Something of a shift in the small group market as well, but not as dramatic. I think it'd be safe to say this is mostly related to changes in the kinds of products that were required to meet consumer needs in the market. Looking at the financial outcome for insurers across the state under the Department of Managed Healthcare, this is largest plans only, of course. Net income has been generally positive. It's been in the range of something less than 5% of revenue in most cases. Overall, in 2014, we saw about a 4.6% margin reported by the plans. Under the Department of Insurance, again, generally positive, a couple of negatives here. Margin range looking a little bit higher. Just at a glance, maybe often more towards 6s and 7s, although also often more towards the minus side. I want to point out that you should take the margin results, especially those coming through the Department of Insurance, where these are national carriers primarily. This reflects multi-state activity, and I couldn't say for certain whether these margins were achieved on the basis of California business. This next slide is just provided to give you a sense of the overall amount of premium we're talking about per person. Here you see what the average per member per month premium was in 2013 for different lines of business. 2014 numbers we hope will be available fairly soon. I would expect individual premiums to be a little higher since benefits were richer in 2014. But basically, the individual market has tended to purchase less comprehensive coverage, and that's reflected in the premium. Any differences in age and so on would also be reflected here. So if you're thinking of a tax on a per member per month basis, this gives you a sense of how large it might be on a percentage basis. Next. I was asked to say a little bit about rate increases, and that's a bit of a slippery slope. It's hard to aggregate well across many sectors and so on, but what I can say is that in recent years, what you see here is the green bars reflect the California's large group experience over the recent years, as surveyed in one of the largest, most consistent surveys around. And those were running in the 6 to 8% range in recent years. The line jumping up and down there, that's PERS care overall, and then the dotted lines represent PERS care HMO and PPO most recently. Of course, anytime you have a single group, you might expect more fluctuation than when you've averaged things across a wide number of groups and carriers. But the point, I think, to take away here is we're seeing things that are less than 10%, but more than 5%. The good news is that recently we're hearing numbers that are a little bit lower than these historical figures. For example, Covered California recently came out and reported a 4% average increase for individual plans offered through Covered California for 2016. We've also heard from the Mercer survey that employer benefit managers are expecting 4.6% in 2016. So I think it might be fair to say that overall we might be seeing in 2016 something a little bit lower than these long-term historical figures shown.